And then we can speak in English. Is it okay?
Okay, I started recording.
Okay, thank you. Okay. So, first of all, Ichimoku is a signal which Japanese tell that you do not have to look into any other technical analysis signals. The Ichimoku itself is sufficient. So that is one of the strongest point of Ichimoku. However, I have seen that if you can club Ichimoku with the other concept, especially if you know the candlestick analysis as well as if you also what you call if you also know the other characteristics, if you combine with say MACD signal and other, it is more effective. But it is from the trader's point of view. For the investor's point of view, I have what I understood that Ichimoku itself is sufficient, more than sufficient.
Okay. Hmm.
Okay, so those who are actually the short-term traders, for them, maybe Ichimoku combined with other signals may be needed. Anyway, so at first, if you look at the visually the signal, it is quite complicated. Quite complicated means, I mean, unlike the other signals that we see, I mean, for example, your moving average or other things, it looks a little bit, I mean, more complicated because there are four major components. The first component is called T, Tenkan-sen. The second component is called Kijun-sen. Third is the Chikyu span. Fourth is the Kumo cloud. It will be for a new learner. It will be a little bit difficult to understand. But let us begin with the comparison. Okay. The first comparison is that your moving average. So if you see the moving average, let me go and then see the moving average. Okay. And for that, I will put up the Ichimoku signal. Okay. And I will put the only moving average. So I put on the 20-day and the 50-day moving average. If you see that Ichimoku T and K signals are equivalent to the 20-day and the 50-day moving average because there is one line, there is a 20-day line. The number of days, the duration reduces, the signal moves along with the price, you can see. And if you increase that moving average duration to 50, it is little bit lagging. That means this is little bit lethargic signal. The similar concept is also with the Ichimoku. If you simultaneously put on the Ichimoku on, then okay, now everything is complicated. Now you will see that okay, in the Ichimoku there are, I mean, lot of signals. I cannot selectively make it on or off. There are tools who can do that. But what you can see here that there is a red pink line and then there is a blue line. Okay, and forget about other things. So if you look at only these two, I put the Bollinger Band on. Let me put off the Bollinger Band off. Okay. So if you put this, then you will see that one signal is moving along with the price. It is must uh, it is having the closer affinity with the price. Another is little bit lethargy. So this pink line is almost equivalent to a 20-day moving average, whereas the blue line is equivalent to the 50-day moving average. Okay, you need to only know about these two. That this one is a T line is the line which is moving along with the price. In this case, it is a pink line, whereas uh, the Kijun-sen line, which is the K line, which is a little bit lethargic. So this is a blue line. Then third is the Chikyu span. It is a signal which is actually 26 candles behind this one, which is the closing price. For example, this is the today's price. You go back, you count 1, 2, 3, 4, 5, 6, and you arrive at this one. This closing price is the point. So you take the closing price of all the days, go back 26 days, and then plot the line. That is called the GQ span. And then there is another called the what is the Kumo cloud. Okay. Now Kumo cloud I will explain later on, but just be acquainted now that there are four components: T, K, the GQ span, and the Kumo cloud. Now let's go one by one. Okay. Oh, by the way, Kumo cloud is a 26 days ahead of the current price. By the way, there is one website which gives all the definition and is a excellent website I have come across. So I will give that the link later on. Okay, now let's understand the first K line, not the T line. K line is, as I told you, that it is a little bit slower line. Okay, go back to the earlier one. This is the K line, the blue line. This one was taken from some other website, so the representation is different. So the common thing is that do not buy or sell when the Kijun Sen is flat. By the way, this is the day price, and Ichimoku can be converted into anything. Suppose you are day trader, in one single day you are operating, then the candle can be converted into 1 minute, 2 minute, or 5 minutes, 15 minutes, whatever is that, and accordingly the Ichimoku signals will be formed. Okay, we can check it through Zerodha. Now this is the K line. A simple thing is that whenever this K line is a flat, do not buy or do not sell. It is a whole decision. Okay. When the price is above K, buy at a crossover. Okay. So, for example, here is the typically buy signal. Okay. The price pierces the K line and goes above. Okay. So at that point, you can do the buy. Let's test with something here with any other signal. We are taking Jubilant Footwork as an example, and you can see this line. This is the K line. Okay, this K line is moving flat. Do not buy. Whenever there is an upward slope, buy. This is the thing you can see that, I mean, up to this particular 11th November, before 11th November, the price was below the K line. Okay, the K here it is mentioned as a base, and then T line as a conversion. But people give different name because T and K are the Japanese name. The corresponding English name is the, for the T line it is a conversion line. For the K line it is a baseline. So you see that the day it has gone above this line. So this 11th November, or to be sure, it is the 12th November. This is the day on which you should buy the stock. Okay. Now let's take another example so that we understand this particular this thing. So Rishin, maybe you can tell any stock name. I'll go to the Ichimoku signal. It is of your preference. Pardon me?
ICICI.
Okay, let's go to ICICI. Okay. So ICICI, you can see that the price is continuously over the K line, so it is safer to buy. But we are, see, whenever it is a flat, do not buy. Whenever there is an upward slope, you can buy. Okay. So yes, now let's look into here. Now let's just see this line. On 17th September, okay, 6th October, this K line pierces from the top and then goes below. So around 7th October or 6th October, even 8th October, it is safer to buy the stock. And you see that how after this 8th October the prices are rising. In fact, how it is rising, let me do some simple calculation. You are now buying on this one, okay? So at a target of say 381, and now it is not a selling time, by the way. Suppose you are now trying to sell somewhere here. After that, there is a bearish candle, and you want to sell here. So you can sell as a 522, and you will make how much profit? You typically make, okay, around 37 profit. 37 profit in how many days? Unfortunately, the this one does not give you the chart nexus does not give you. So you have to go to here, the Zerodha has excellent tool. It will also tell the duration. Let's go to ICICI Bank. Let's see, we'll go. So we'll go also the same thing. Okay. Let's also display about the, okay, when was this particular date? Yes. Now let's understand which is the K line. Rishin, can you tell me? I put only the Ichimoku signal. Which is the color of the K line?
The baseline is the blue line.
Yes. So the base, the T line is the blue line, and the K line, okay,
Yeah.
is this one. This is the K line we are talking about. Okay. So you can see that the K line here, this is the K line. Okay. And then on this particular date, okay, on this particular date, what is happening on this particular date? That means 7th of October or say 8th of October, the price has gone above the K line. So this is the day you can buy. Now we can draw a chart. Okay, a measure tool. The measure tool is a fantastic measure tool. I'll, I will say on this date I will buy, and then when is a bearish candle, let's assume, though this is not a selling signal, and you can see on the top that there are 48 bars and 38%. So 48 bars typically will represent the 48 trading days. So we know that in 1 week there are 5 trading days. So then the approximately 10 weeks. So 10 weeks will give you say around 12 months. Huh. So 2.5 months, you will make 35% profit with ICICI Bank. In fact, if you do not have much greed in the market, if you are satisfied with the 4% target per month, it should be sufficient. And as you know, that 2.5 months, you have made 35% profit is a huge profit. Okay, because 2.5 months, as per the 4% target, you should make only 10% profit. So from this lesson, we can learn that only using the K line, you can do the Ichimoku signal. Okay, now let's go to the second feature of this one. Okay. Now, do you have any question
No,
here?
no, it's clear. It's clear.
Very clear. Now let's go to the now TK cross. Okay. So now we are going to have the combination of signal, and you will see that it is exactly equivalent to the 20-day and 50-day moving average. So whenever there is a cross, then that is a point, and that is a point of the early signal. Okay, and typically it happens because, as you know, that the T line is a much faster line. Here in the case, the T line is the red line, and then the T line crosses from the below. Sorry, okay, crosses from the below, and then it goes and above the K line, and that is the day that you should buy.
Mhm.
And obviously, the sale is the reverse. That means the mm, uh, the T line falls below the K line. Okay, that is the day you should sell. Is it clear? Now let's also look with some of the example. Okay, so let's go for the ICICI Bank, and we want to go something different because here we can see that the price is moving. Okay, the price is moving and the price is going up and price is going down. Okay, so here typically we will see that for the Ichimoku, what is happening that the
Price will
cross.
up more, looks like, because the conversion point has not come yet for sell.
Yes, yes. Say 10th, 11th of September is the crossover. You can see. So 11th of September you sell, and then again you can buy. You can buy whenever the upward crossover. That means the 8th of October. You know that even if you are holding the stock, I mean the selling will actually will protect you. Okay. But here in this case, you can see that Ichimoku signal is not a very strong one. And then there is a other parameter to evaluate because you have exited on this say 10th September. Okay.
Hmm.
And then you have entered again on the 8th October. So there's not much difference. In fact, you have made a loss. You have sold at a less point, but that is not the failure of the Ichimoku signal because the whole price is now moving sidewise. That means it is moving horizontal, and there are other signal parameters we'll come to know that how to know that the is not a right time to buy from the other signals of the Ichimoku. Okay, now let's go for a typically uptrend stock and then going downtrend. So you can see that the ICICI Bank, this portion was typically an uptrend. It is an uptrend stock because continuously the price is above the K line, the price is also above the T line. Okay, in fact, here the T line acts as a support line for the price. Now the first signal of the selling actually will come because the price has fallen down on 31st of December below the T line. Whoever are very aggressive in the market, they will immediately sell on 31st December 2019. Now you will see for the seller, for the investors, actually this is the crossover point. That means they will exit from the stock on 10th of January. Hmm. They will not wait for this one. When both actually the price is the T and K. Now here you have to know another thing. Here there is a crossover, but still the price is above this one. So this is not actually an ideal selling point. So now we have to now punch the earlier theory. That means when the price is going below the K line, as well as the TK crossover has happened. So this is the day you should do a selling. Okay. And thereafter you will see that what is the pattern. It has heavily fallen down after moving sideways. Okay. Now this is the one. And you can test with some other these things, but okay. Let's go another thing. Other reports. Okay. And we will see that here your this thing is there. Now let's move the Ichimoku. So Ichimoku, there was a constant is a you see this portion of the card. As I told you, it is little bit complicated to look into, but in order to observe the Ichimoku, you have to put off the other things. So now it is much more clear. Okay. Now, as you can see that there is a TK crossover. Here the TK crossover is typically this is not a crossover. Okay, it is moving along with the line, so it is not typically a crossover. But this is a TK crossover, you can see, and then you can actually buy the signal. And you can exit the signal here. Again, it is a TK crossover. Let me mark these 2 points with a line, otherwise it will not be clear. So on this is a TK crossover, and then again, then on this particular date, okay, there is a TK crossover. Okay. So basically, you will enter at this point and you will exit at this point because the stock price is moving sideways. So you will not make much money. So this TK crossover will be applicable if it is a strong uptrend. It is going on, going on. The uptrend is going on for some time, and then there is a crossover. Then it is a point of the exit. Is it clear?
Clear.
Now let's go to the next one. Kumo cloud. Okay. Kumo cloud is another interesting thing. As you can know that there is a cloud here. Okay. So whenever the price is going above the cloud, the day the price goes above the cloud, it is a buy signal. The day the price goes below these things is a sell signal. So the rule is very clear. Okay. So let's go to see again, say for the ICICI Bank. Let's go to
Hmm.
so we can see here that the day the price on 22nd of September, the it is falling below that, then
Yeah.
it is sell signal.
Crossovers and the cloud crossovers, they are not happening together.
Which one?
The,
Yes, they are not happening together. The TK signal is actually an earlier signal than the cloud. But the investors actually a little bit lethargic. They want to make sure multiple signals are there. Okay, so they are getting the early signal that T is falling below the K, so it is now time to sell. But I will not sell because that still the price is above the cloud. The day when the price is coming below the cloud, he will sell. Okay. So this is the investor's decision. Similarly, the day when the price is going above the cloud, that means on this particular day, and then you have to combine with the candlesticks pattern because there is a quite large bullish signal. If you read Ashwin Gujal's that book, that day trading, he has analyzed the candlesticks very beautifully. He has categorized candlesticks in three categories. One is the very, very short candle, which is the typical you see, these are the short candles. That means the body of the candlesticks is very, very short. It indicates the indecision of the market. And the large candles are typically the decisions which will drive the future. So this is a large candle, it was a short candle. These 2 3 days, then there was a large candle. That means now the market will move forward. And these days, the the price went above this one. So this is a confirmatory, and you can see that after that price is rising like anything. Okay, is this signal clear? The
correct.
price is correct.
Hmm.
Now let's go to other one. Then thin and thick Kumo cloud. This is a very interesting thing. There are thin Kumo. As you can see that this cloud is a little bit thin, and then here the cloud is little bit thick. If the cloud is thick, the price takes more time to break. That means if the price is trying to pierce, it is the price is coming from the top and it is trying to go through the Kumo going to the below. But then if the cloud is thick, it is difficult for the price to break it. But if the price is thin, It can go at any moment because the resistance of the cloud is not much. Okay, it is easier to break.
Mhm.
That means the market will be more volatile. So you can see here. Now let's see also some practical
When
things.
lagging
Yeah,
in it can still, that thickness can give a indication that it's going to break now.
exactly. Whether it is easy to break. So even if a cloud is a very, very thick, and you are, for example, this is a thick cloud. Can you see this one?
Hmm.
The thick cloud. The price is moving upwards, and you are getting, there is a crossover, by the way. You are thinking, wow, wow, let's enter. Now let's buy it. But it is not a good buying decision because the cloud is very thick. It will be very difficult for the price to break the cloud. Whereas if it is a thin cloud, if this section is a thin cloud and the price is moving upwards. So for the investor, this is a very easy decision. Even the earlier, what do you call, the aggressive people, it is approaching and there is already crossover happening. Okay, now they can easily enter because it is easy for the price to break the cloud. Is the concept clear?
Very clear. Very
Very
clear.
clear. Let's go to the next one. Okay, one thing I have not noted down. Yeah, Kumo twist. Kumo twist is a very important feature. There is a color of the Kumo. Now, here in this session, I will not explain what is the definition, how this Kumo is cloud. That is a theoretical thing, and there is a website you can also look into that. Okay, I will give this one the reference later on. All the technical definitions are there, but I am a little bit practical person. I don't look at how it is formed, what is the mathematical formula. This is a signal. See the signal within 1 minute to take a decision whether buy or sell. And if you are a day trader, in fact, looking at the signal, I, I I now understand it takes me only 10 to 15 seconds to decide whether to buy or this. Now let's look into the Kumo twist. Kumo twist is a signal where you see that you will always look from the current candle and then ahead. You go ahead 26 candles before. And then what is the color of the Kumo? Here for the blue, what do you call? This one is a bearish and this is a bullish Kumo. So there are two types of the Kumo cloud, bullish and the bearish. Till now it was a bearish Kumo. And then for this particular date, the price is above the Kumo cloud. Okay. And the future Kumo is going to be a twist. That means it is going to be from the bear to the bullish. So this is the right time to buy. Let's now take some example. Mhm. Mhm. Here we can see a Kumo twist. There
Hmm.
is a Kumo twist.
Very bullish.
There is a Kumo twist. Okay. So in the Kumo twist, we can see now you have to go 26 days candle before. How to go that? There is a technique here. Okay. In fact, in zero that the technique is different. I'll show in zero because this one is a place. You see, this Chico line is 26 days candle before that. So you have to draw a line between these and these typically, and this measure is a 26 days candle. Okay, and then you have to shift this one. Okay, you have to shift this. So now you shift this one. Now here there is a Kumo twist. So approximately on this particular date, that means from this Kumo twist date you go back and then 26 candles on 19th or 20th May, 19th May, it is ideal to buy the stock because there is a Kumo twist happening. And you can see the price is coming down, but it could not break the cloud. But after that, I mean, so this is a confirmation signal, okay, that Kumo twist is going to happen. Now let's go back to Zerodha. In Zerodha, the measurement is is better because as you move the signal, then accordingly you will see that the Chico is going to change. Okay, and in Zerodha it is easier to measure the number of the candlesticks by this method. Okay, so we can see that there is a bearish. Okay, now from this you put a candle. Sorry,
And that cloud is a thin cloud. That's why it didn't stay for long. It this is
this-
crashed.
exactly. There's a thin cloud. You are right. So now the 22 bar, 26, 26 bar, it is coming on this one. Okay. So on 8/6, that means 8th June, you can see there is a twist. But the future cloud is a bullish cloud. So there is a decision bullish cloud, but investor will not do anything because it has not pierced on 8th of June. The price has not pierced, so the action will be typically hold the stocks. And also you can see the K line. The K line is a horizontal line, so this is not a right time to enter the market. Okay, though the Kumo is. So you have to check multiple parameters to see. Okay, so the Kumo cloud switch is a confirmatory signal, but not a major decision. Once you are very clear about the other things, then you will be depending upon this one. For example, here there is a Kumo twist happening. Okay, so there is a Kumo twist happening. So you again go back from this one, from this signal, and then 26 signal, this one. So then there is a Kumo twist happening. Okay. Now this is a bearish one. So then you will see on this date there was a bearish. In fact, there was a bearish. Now again, the bullish, I think this is the bullish signal. So the bullish Kumo twist has happened from there. That means you go from this one, go back 26 candle, which is this one. That means this particular date, which is the 15th of October. But
Yes.
15th of October was a bearish signal, okay, and it is the typically bearish engulfing. Between the 14th and the 15th, there is a bearish engulfing. So you wait for this. Wait for the next day. In fact, the next day, there is a big gap in the candle. This is the day for buying.
And that's the evening star also, right?
Yes, yes, yes. You are right. Okay. So, uh, along with the other signal, if you see, and then the future Kumo cloud is a bullish twist, so you can safely buy the stock, and you will see that what has happened after this stuff. So is the Kumo twist concept clear?
Clear.
Let's go. Okay, so this is a future twist. I have just given one more example. Okay, so you can see that this, okay, this is a Chico one. So we'll avoid this because the Chico you have not learned it. But if you see that on the left side, I have shown a signal where on this particular date, that means 10th of December, there is a Kumo twist. Okay, and the Kumo twist is the bearish twist. Actually, not the is not a bullish twist. And then on the right side, the same signal is extended, and you will see that what is happening, the price is heavily falling down. Okay, and on this particular date, the price also has gone below the Kumo cloud. the price has gone below the Kumo cloud. Kumo cloud is a very strong signal, and it was a thick Kumo. So the price has gone below the Kumo cloud. Future is the what do you call future Kumo is a Kumo twist and is a bearish Kumo. So then there is every signal that the price is going to fall down. So you better exit the stock. Is the concept clear?
It's actually very affirmative signals, very clear signals.
Very clear signal. Okay, now let's go to another one. Chikou span. That is the last part of the story. So what is the Chikou span? Chikou span, say we have talked about the Kumo. Kumo is 26 candles ahead the current price. Chikou is the reverse. It is the closing price 26 candles before. Okay. So if you see that before that, that means you have to go back the history and 26 candle. So let's take on this particular day. Okay. And you go back and then you see that Chico line is now crossing from the below to the top. That means this is cutting the price, okay, and going upward. This is the confirmatory day. You should buy the stock. Is this clear?
Show me
Okay.
an
Now
example.
let's see.
One of the bank.
Yeah. Now let's now see the example. Now say
This is Adani Port.
Adani Port. Okay. Now here I have to go back. First of all, 26 candle. So what I do, I draw. This is the 26 candle graph. And I take that, and then this is the day. Now I move this one here. Okay. So on this day, I moved it, and maybe the CQ has gone up. See from this. So this is the confirmatory day on which, that means this is the day on 30th October is the day to buy the Adani stock. And also on 30th October, I can see that there is a bullish candle and it has been, over the cloud. Okay, the TQ span has gone above these things. There is a confirmative signal that you can buy the Adani stock. Okay, let's go to another. Here.
Same analysis as of today. If I'm going to make a decision as of today, then
Yes, that is also possible. See, we are just back testing this one.
but
But
if I make a decision, I'll just see if any stock.
any stock, yes. And in fact, there's a very good
Yes. Take a point.
there is a very good charting.com. You can program this. Let's go to the charting.com. It's very this thing. You can put the formula. Okay, I can see that there's a lot of formulas given. You can make your own formula. For example, I have made some formula. So I think they are having this one, cloud crossover. And they have given this one. But you can add this formula. You can modify this formula. Okay. So accordingly, you can make. Okay. So these are the things. IPCA laboratory, for example, is now showing. Okay. Now we'll see the IPCA laboratory. This formula is what? That is, it is the top cloud. It is crossing that. Okay. So you can put other formulas also. You can configure and you can observe this one. So let's go to Ichimoku because sorry, the IPCA, correct? But it is not giving a very good signal. This is the automated. Okay, but I did not consider this one as a good example. The stock is falling below. So the
Take a loan, Ambuja Cement.
Ambuja Cement. Yes, okay, Ambuja Cement. Yes, in fact, it is not a very good thing. Okay, I think there is some problem. Oh, okay. Maybe it is a sell signal for the. It has entered this one. Okay. So it is not a
Thick
good.
cloud also there.
But here we can see Ambuja cement. Okay, there is a very clear cut difference here. Okay.
It's actually one should have bought there. Now it is giving a sell signal.
Can you see the Chico span, that this green line, it is moving as I'm moving the windows, correct? Okay. So we can see that, see, this is the day. For example, if I exactly move here, let's say I am moving here. I don't know what is the future one, but Chiku has crossed this one. Okay. That means 26 days candle before, approximately on these dates, okay, 6th October, okay, or 7th October. You can see, because this is showing for the 9th October, this Chiku span is here. If you say 2-3 days before, this is the ideal day to buy the stock, and we can see that, okay, it has moved after that. Now if you expand this one, you can see that the stock is rising. Okay, at least for the short term stock. Again, stock is now going to this week. But on that particular 9th October, you can buy the signal. I mean, so it is always, it will show the current one. Okay. So is it clear? This one,
Yeah.
this Chico fan.
Hmm.
Okay. So this is the one.
Example of that, just to make it more clear.
Shall I show another example? Okay. Now, which chart you want to see? ICICI or some other stock?
TCS.
TCS. Let's see TCS. Okay. So let's see TCS. Okay. So TCS, you can see that the Chiku has gone. Wait. Chiku has gone almost this particular date on above this one. Okay. So this is the date on which you can buy these things. What do you call the stock?
So
So
it has gone into a buy signals
this
on
is a,
the 1st of December.
so you have to go ahead this one, because Chico is a back signal. So this particular line is falling. Let me again draw this one, this line. Right. Where this is a 26 bar. So there is a bar you can draw here. There is a provision. Wait. This one is it. Okay, now this bar can move. Sorry. Change it. Okay, now this one is, so these are 26 line. So you move this one, say on this particular date. Okay. So this particular date, you can see that, okay, now here. So this particular date, okay, which was typically 28th, you can see the date it here. Okay, so 28, the Chiku span were clear and you go ahead. So actually on 4th of January is the ideal date to buy the stock, because the Chiku span is going above this one, above the price line. So 4th of January you buy, and then you can see the rise of the stock. And also 4th of January is very safe to buy, because 4th of January the price was above this one. Okay, so is the concept clear? And we know that the cloud is quite thick. Okay, so even if there is a downtrend temporary signal, it will be very difficult for the price to pierce through the thick cloud. Okay. Plus, there are other conformity signals because the price is both above the T and K line. So this is the ideal time to buy the stock.
And even the cloud is thicker. So every way, there's a time to buy actually. In fact,
Exactly.
they have just crossed the date to buy it.
Exactly. Okay. Now let me also complete this one. Okay. Then there is a stop loss at the sell signal. Ichimoku also gives you that if your prediction is not a correct thing, then you can do a stop loss. So this one I posted few days back. Let me explain it. That how to correct. Do the stop loss. Okay. So you can now say buy on 22nd of June. This is the 22nd of June. This one. Okay. This is the buying date. Why I will be doing the buy date as the price is going above the Kumo. So that will be my buying date. I bought it. Okay. Now price has gone up, gone up, gone up, gone up. Then there are multiple exit points. Okay. So I generally buy little bit, next day I will buy more. Okay. When I will start selling, I will do the staggered selling. I will not sell everything on the one day. What I will do, the moment the first is that I see that this is crossing the Bollinger Band, and next day there is a bearish and there is a bearish engulfing signal, I will do a little bit, do a sale, and then between this buying date and this one I will make totally a 25% profit. You can see that it is a profit line is also there. I will make 25% profit. Then what I will do, I will wait, the price is falling down, falling down, and then on this particular date, the 14th July, the price is falling below the T line, not even the K line. I will make another sell. Okay, this is my strategy. This, by the way, you will not find in the book, but this is my selling strategy typically. So I will do a second sell because the price has gone below the T line. Okay, and by doing that, how much money I'll make? I will typically make say 70% profit from the buying time. Okay, and only within very few days. Then there is another selling date when the overall the price is below the T line. That means typically this is on this particular day. And then there is also crossover happening. Okay. So the crossover is happening and the price is moving this one. So 27 July I will exit and then I will make only 10% profit. So I will do the staggering. See, these are the early signals that it was giving sell, 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 multiple days. So I will then finally make. Okay. So is it clear, this decision points?
And this, I was finally trying to check with a minute chart and all. I think this works only with a day chart, right? Because the formula is for the 26 days and things like that.
No, no, inside the day, also this one will work. Do you want to see one intraday things? In the intraday also you can do the same thing, the Ichimoku. It is not,
Most
yes,
one, say for example, BSC,
yes, you can do the BSc. Let's go to
that's
the BSc.
very high in there.
BSc. Is this the one? BSc? I hope so. Just a moment.
It's correct.
This is the BSc, okay. Now let's go BSc 5 minutes chat. Want to see 5 minutes or 2 minutes, whatever. So this is a falling one, okay. This is a five. This is a falling one. So now let's see here. Let's expand this. So I will typically exit from the BSc. And by the way, from the Rakesh Junjun, sorry, that Ashwin Gujral's book. This is a typically bearish signal, bearish pain. when the upper is a long shadow and the body is a very small, is a typical bearish candle. And before that, there was a long, large candle. The price is below that. I will try to exit from that. So I will exit this one, and you will see all together this price is below cloud, below cloud. It has tried to break the cloud. It has failed. Then there was a long bearish thing. After that, it is falling only falling. For the intraday trader, it is an ideal thing that okay,
This is
it
the
typically
ideal item to short actually.
it is an item to short. First, you go for a sale. I don't do intraday. Okay, and then when do you buy? Now it is the buy is that the moment it is a theme, but still the price is moving. It is not a pure breakout. So more or less it has thin. So all this particular time you can do a buy. Okay. Now what is the difference? Actually, it is a 2 day. So 2 day, and it is so basically you settle on the same day. You can settle here because there is no chance this one is going to have. But this is the
Go to
ideal
the
time.
case
And
chart, then it will show a different picture.
which one?
Convert this into a days chart, 5 minute to 1 day.
Yes.
Now see,
The, there is a difference. Is there a difference on which one did we go here? See, this one we went on, what is that? On 17th of January, correct? On
hmm,
the, sorry, 17th of December. We have seen typically this one is the 17th of December. Uh, sorry, this one is the 16th
day
of December.
it is bad, but for a longer investment is good.
Which one?
That BSC.
Yes, yes. Longer investment, it is good. Okay. But on this particular day, okay, on 17th, those who deal with this one, they will always do a short here in the morning. Okay,
Hmm.
they will do short here. Now 17th, now we see the day chart. Okay, now this one, let's see December 17th day chart. Day chart, it is nothing. It is still what do you call it, a buy signal. It is moving actually sideways because this is there.
It's
Okay.
actually the red side, so it's not actually buy time also.
It
And
is not.
and
It is a buy
the
time. Is,
middle line, the what you call K line is also flat, which means no trade.
so don't buy right now. When was the buying time? This was part of the buy time. There was a thin Kumo cloud, and then there was a gap. Okay, and then maybe you can do a buying here. Okay, if you do buy here, you will still make profit here. And you can be safe buying here because if I go here, what to go? There's a 26 candle below.
So where was the buy? 1 minute.
The
Yeah,
buy,
that was the buy. Huh.
this is the buying day, no? I mean, say 23rd of November was the buying day. This one is the buying day. Okay, because it is
23rd or
going up.
24th, whatever.
23rd, okay, because there was a gap. Okay, now next day there was a bearish engulfing. So I know it will be now falling down. So I wait. Again a bearish signal. Then there was an indecision. Actually, okay. Now the price has gone below this one, which is not good. Okay. But oh, another thing, did I mention that? Okay, if this line is this one, I mean, this K line is a flat line. It acts like a magnet. I think in one of the slides it is mentioned. Let me go. The power of the magnet, yes, straight line is flat market, and it will try to pull it. It like because it has got a magnetic power. If the price is below, it will try to pull up. If the price is up, then it will try to pull down. So typically, you'll see that this is like a magnet. Now let's go here. Okay, it will try to pull. It will try to pull, but then there is a break from here. Okay, and there is a big bullish candle. So my question is that this is a fairly good point for the entry. Okay,
For me,
what is this?
for entry. Yeah. Okay.
Yes, and this particular date is a good point for the exit if you have already bought. Okay, there is an earlier signal. This one, okay, it is falling down, one falling down. It just appears the Kumo cloud. You wait, and this one is a sale date because after that you will see tuck 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 prices falling down.
Hmm.
In fact, those now the last part of the slide will go is a combination. This is a stop loss. We understand. It's a combination. Now you have to apply the combination. Okay. In fact, there is a fantastic book by uh, what do you call this one? It shows large number of the example. The book is, let me unshare the screen and then put in the video on. I'll put my camera on. Okay.
Yes, sir.
Are you able to see this?
Yes.
Okay. So how to make money, and the author is, just a minute. Author is Balakrishna M. Sadeka. So there is only one book available, I think, in the market. If you go to Amazon, there is a what buying book. Okay, this is a
Hmm.
book. It's a wonderful book. Oh. Actually, whatever I have explained you, it will explain the same thing, but it will explain also a combination of that. Okay, and it is a real good book. It is a what buying book. Okay, so if you are having Kindle Unlimited, then you can have that. Otherwise, the paperback book. I really love this book. Now, let me go back and then just a minute. I will now share something here. Now, here, let me go for this one, and then I will let me explain this a little bit. So, you will see that TK cross is result. T crosses from the K below. Yes. Price is above. Yes. K line is upwards. Yes. So it is the whole combination. The price cuts the Keynesian from below upwards. Okay. The price cutting, not the TK crossing. Okay. So it is a yes. Chico crosses this one. It is a strong buy. It is because multiple signals are showing you is a buy. Okay, you must buy it. Okay, then there is a weak buy. Okay, in fact, this book explains very clearly the strong buy and the weak buy. Here you will see is a flat. Okay, price is above the Kumo. No, it is not that. There is a TK cross. Okay, Chico is the below price line. So these signals are then, but still TK cross is there. This is a weak buy. That means there is a risk for the investor. At any moment, it can twist. Okay, again, then there will be TK cross, but in that case, there is a reverse cost. This is the buy. Why? Because the Chico is above the price line. Okay, TK cross no, but the price is above Kumo. K line is upwards. Okay, price is cutting. So you have to check multiple things. If it is possible, then buy. Okay, so that now ends, I think. Okay, this one. Okay, so that's all. Now you can have some questions, and then you can do the stop recording. Then I will give some more information. By the way, there's a beautiful PowerPoint slide. Oh, and let me show you also one beautiful website. I posted some time back. I don't remember this one. Did I post it in stock market? Oh, I did not share it, but let me share. Mm-hmm. This is a fantastic web page. Okay, let me also put that. Okay, so if you see this one, then it is a very more or less comprehensive thing, and it will explain you a lot of things. It will show you the calculation. Okay, it's a good site. Okay? And it will explain you many of the things. Fully bearish, Kijun bounds. Okay, it will explain a lot of things. Kumo twist and H to it. It explains some more things. H to H something that it explains something called Kumo breakout. There is another C clamp concept. It is a new concept, C clamp. It's quite advanced. Okay, I would say. So after this initial training, you can go to the this one. There's a Kumo breakout H to H. C clamp concept. In fact, I further investigated in C clamp. C clamp is basically the combination that the price is. I mean, it has cut typically the T line, okay, but it has not cut yet the K line. Okay, the C clamp concept actually it is there in my slide. It is almost this one. Okay, that means the price is in between the T line and the K line. Okay, this is something called, I mean, some people call this, but you should go to the YouTube, you'll find it. Let me typically save this one.
I tell you one thing: if the price is coming below the
Ah,
T line, that
yeah,
means go back to your that box, that this thing,
just a minute. Yes, which one?
that this thing, that slide is there, no? The table is there. Yeah, yeah, the previous one.
Ah.
Now it is below the T line. Yes.
Yes, below the T line
T line is the trend line. Matlab is the baseline, right?
there is a baseline which is moving along with the price.
Okay,
Okay.
but I'm just trying to correlate with one of the charts in front of me. Price
Okay.
above Como, yes.
Can you share your screen? Then I can guide you.
No, it's just ICICI Bank. I'm looking at ICICI Bank, trying to see as on today.
Okay.
Day chart.
Fine.
I'm doing with ICICI because that is what the chart I was looking at for the last 2 3 days. Okay, so
Yeah.
now the price you see is going below. Just now it is going below.
Yes, yes, yes.
Okay, so it
It,
is the right
it has
thing.
not fully gone below.
Just
Okay.
now one below. The crossover has not happened, but
No,
it
no.
looks like the crossover it was about to happen. Then it's not going to, but it's going flat.
Correct, correct. So you
So
cannot
that way,
predict. You cannot predict just now because there is a see here there is a lot of bullish pressure. You can see there were three consecutive days bear pressure. Okay, it has not fully crossed. Then now it is just above this one. So really, ICICI Bank, it is actually a buying signal. You will see
and if the
because
price is
this
above Kumo cloud, then let's go
the
back to the
price
table.
is very safer. Price ICICI is a very safer to buy it actually. Okay.
Um,
Now about this one, just a minute. Let me show this
Acha, tell me one
one.
thing. From your that highest movement chart, na, as on
Uh,
today, can you take the number one item from there and see the chart of that?
which one? Highest?
That list you make, na, where is the maximum volatility is there, maximum positive volatility is there. So let's pick up one slide, one slot from there, which is the best buy as on tomorrow morning, and check the
So
slide of.
you can program this one in the charting.com, all these conditions actually. I have not programmed it. I'm planning to program it during the Christmas holidays. That then it is a strong buy signal. And also I will
Let's
test
check one
that
more.
before few days the price was below the Kumo cloud or inside the Kumo cloud. Now it has so much complicated what you call algorithm can be programmed in the charting. I've seen one or two cases that it is now price is trying to pierce. So the condition that we are seeing manually here, no, for example here. So if we can below, okay, few days back it was below the Kumo cloud. Now it is above the Kumo cloud. Okay, or either it was inside or it is this now. This is the day we can buy. Okay, and here you will see that both cases, and then the price is also above the what do you call here one observation the Kumo cloud is above T and K line. Have you observed when it is a strong uptrend, okay, like this one, you'll see then both T and K line is above the Kumo
Hmm.
cloud.
This is
Another
actually that way the safest bet at this moment, because I will give you one more stock, which is the opposite of this, Reliance.
Reliance
Just
is
opposite
actually
of
a
this.
selling. Yes.
So
Yeah.
see, this is clear cut.
Reliance highly
That,
now is a selling indicator.
hmm,
You should actually
is
exit from
below,
the
below the cloud. The cloud is
like,
thick. The crossover is also happening. I can see
yes,
there's a sale
crossover is
crossover
and Chico is below the price line.
below the price
Is
line.
clear.
Price line.
Okay.
So if
Chico is
somebody
below the
doesn't
price.
have Reliance, is the best time to avoid it.
Yes, yes. It's best time to. So what I'm doing currently, I'm selling Reliance and putting the same money in ICICI Bank. That's what I do. I'm not investing further. Okay. I just take out the money from one stock, put the same money in
But
other
see,
stock.
but the fundamental
That is
wise, Reliance is a more fundamental company than fundamentally strong company than this thing. Then
you're 100% right. Suppose you are seeing this 1 year chart or this one, no? The Reliance is continuously increasing. It's a long-term things.
hmm.
Correct.
If
The
somebody
long
wants
term.
to take a bet, he will wait for the buy signal on this, where the crossover
Yeah,
happens, buy there and
correct.
leave it there.
By the way, Oshwin Gujral has made very interesting statement. The more these candlesticks weak, the span is more, it is a more reliable signal. See, now I'm in the 1 week chart. Okay. 1 week chart is more. Now in the 1 week chart,
It is saying to
you will
buy.
see. No, no, it is a selling.
Sorry,
It is
Huh.
almost,
Selling.
it is K cross is happening, but still still it is a vertical, but it is what it is a selling signal. The selling, the full 1 week chart, it is going to happen. It is not a 1 month chart. I don't know whether it will give 1 month. So let's see 1 month chart. The 1 month chart, still it is not a sell signal, but still for the short time, even for the 1 week, it is going to be a sell signal. You can see. Okay. Because the price has just fallen below K as well as T line. It has fallen below the T line already. Okay. Now it is now falling below the K line also, and there is a crossover going to happen.
So when the
And that
crossover happens, that will be what? That will be a sell signal. Huh?
that is a 1 week. Whereas a 1 day chart, if you see that already the sell signals are happening. That's why I'm slowly exiting from Reliance.
Hmm.
In fact, Reliance I started exiting from.
Reliance.
It is also, you can see that now if you see the future, what is the cloud? The future cloud. See, this was the bullish cloud. Green is the bullish cloud, correct? The future cloud is the bearish cloud. So the future trend of Reliance is a bearish. Now it is moving sideways. Okay, but the future cloud. So actually, I put on this date I have sold the signal, but I have given a hold signal to Reliance. My call with the Reliance is a hold, though it is below this one. When it will be the further falling down, yes. So basically, it can also happen that Reliance can pierce the crowd, but currently it is either hold or sell, because Reliance for last the few days, I mean few days means last since the November beginning, Reliance is not giving me much return, frankly speaking. Uh, So I can safely, more or less, little bit, I exit from Reliance, and then I typically, for example, there was a strong bullish. I waited for this one. Okay. And the next day there was a bearish engulfing. I exited from Reliance little bit.
Hmm. As I
Solution,
said,
is it clear?
when the lines are about to cross over, some selling pressure is there in the market.
Yes, yes.
And when
There
the
will be.
actual crossover happens, then the reversal happens.
Exactly. So do you agree? Ichimoku is a very
Yeah.
strong this thing. If you just apply Ichimoku, and now what you can do, also you can apply your
What
Bollinger
I
Band.
could guess from the other chart about Reliance and ICICI Bank, I was thinking, am I really going right or not? This one confirms it. Yes, my thinking thought process is right. This is what is going to
Yes,
happen.
yes, yes.
And
You
this
can
along with
combine with the
Bollinger Band will, I think, will give the ultimate confirmation.
exactly. You can combine the studies with the other things, but it will be very complicated as you can. But you
Once
can,
I start
for
looking at the,
example,
uh, once I get habituated with the lines, then
yes, yes. For example, let's take example of the Reliance 27th October, or maybe there's a strong bearish 27th, 26th, or 28th of October. I will switch to here. Okay. And I will now see, I'll put off, this is the what, 27th October, 26th, 27th. So we are going to talk. I will put Ichimoku off. I will put now your Bollinger Band. Which one we talk about? 26th, 27th October, correct? All these things. 26, 27, this particular date. Let's put a marker here. So 26th October, and maybe this one. Okay, let's not do other thing. So now we'll put your other charts. For example, we'll, sorry, I missed the thing. Reliance Industries. Yeah. 26th October, correct? 9/9/26. Okay, we'll put here. Now we'll put moving average, this one. Okay. So in the moving average, we can see that, okay, it is the actually moving average, the crossover has happened earlier and it has given a signal quite before, not even for that. Okay, so in fact, if we compare, the moving average gave much earlier the signal compared to this one. From 26th August, it is there. What we do here, that the moment it is going entering the cloud, and also you can see the TK crossover is there. Here, what was the date? Is the 15th October. Okay. We go just a minute. What was there? Yes, and also MACD signal went below that. So it is 1st of September. What is the state of 1st of September? Around this time. Okay. Around this time, but is it matching or am I seeing other? Reliance Industrial Infra. Sorry, I have seen a wrong signal. That's why. Reliance Industries Limited. Right. Why it is not? I think some problem. Not. Now it has come. Sorry, we are looking the long chart. So here, see 20th October only, it has given a signal, as you can see. Okay. And for the earlier things, if you say both the price is falling below this thing on 20th October. Okay. And also you can see MACD is falling below. Okay. So for an investor's point of view, you can also look at the other signal, but it will give the same result. So if you go here, okay, for example, here, now here, 15th October, yes. When the first sell signal occurred, 20th October. Here, what is that? 27th October, 20th October, yes. Almost during the same time. Okay. In fact, this was the crossover. So now do you understand? Hello?
Yes, no, I'm just watching that. 1 minute. Yeah, correct.
So if you compare this one with the other signals, this coming almost
similar result.
It's a similar thing. Okay. So that's it.
Okay.
Okay. So you can stop the signal, then I will share something with you.